Hey everybody, welcome back. So I'm going to do a video, a trading video, which will talk about um, some trades, get actually into, where did I take some trades, where did I engage the market. But before I just do that, this is going to be a trade review. If you're not following me on my free floor trader room, I highly recommend you do. It's free. Now, one of the limitations of this room, obviously, is it's free. And the other limitations, I have to type things in. And it's really hard to type things in real time and get pretty accurate as far as my entries go. So, what I do is if I can't, here's an example. Graphs. Graph on Friday. You can see this is Friday 114. I was watching it for shorts. Now, by the way, room is up 197% in 16 months. So graph, I was watching for shorts. It made 3 attempts higher. I said it was bearish. It couldn't make it. And then all of a sudden at 150, I said there are the buyers, so no trade. And then it went to 50. But you can see here it's really hard to, enter trades into my platform, type in here at the same time. I try my very best to do that, but keep in mind a free room obviously is going to have limitations. If I ever ran a paid room, I'd probably do my live screen, and so you'd be able to see my live screen all the time. But let's go through, because this week I did something that I haven't done in a while, and I'm really glad I did. For a while there, I was messing around with Forex, and I wasn't too happy with that, and I wasted a month on that, ended up breaking even again after wasting a month on that. But I decided that since this market is still in a Fed parabolic, meaning that the Fed is still pumping tons of liquidity in the market. So shorting a market like this is really, really hard. And for those of you guys that know, I am a short sale specialist. I don't just teach short selling, I teach everything. It's just my personal preference. I am a short sale specialist, but my students make a fortune going long. So I want to clear that up. Okay, I want to be very perfectly clear about that. But what I want to do is, for this video, I want to go through all the trades that I shouted out in this room. And we're going to stick with the penny stocks for now. And you can see here, WKS, NMTR, TTOO, WRC. We're going to go through all of those one by one from the beginning of the week, because it was really an enjoyable week for me. And I think I'm going to be doing more penny stocks, and I'm actually going to consider even doing a live room, which is something we can look forward to in the future. But let's jump into these stocks. I don't want this video to go on forever. So let's start off with the beginning of the week. Okay, so here we are on Monday the 29th. And the great thing about this room, guys, and this is what why I separate myself from every other trading educator on the market, because my room is witnessed by 15,200 people. You will never find anything but time-stamped calls here, right? So, for example, on Monday 29th at 11:10, I took a short here, very small size, an SHIL. My entry was 32.32. So everything is time-stamped. You can go back and, there's no fudging of anything. I can't make up stuff. But there was 2 trades we traded on Monday. It was SHLL and also WKHS, right? And I won't go through them all, but I'm just going to go back and recall the trades. Basically, Monday I took 4 trades, I think, approximately. You can go and check for yourself. But they all broke even except for one, which ended up making me some really good money. So let's look at those charts right now. So SHLL gapped higher, right? Now, usually when something gaps higher, I really want to be buying it for the most part. And I probably should have been buying SHLL early in the day. Now, what you're seeing on the chart here is my custom built algo that whenever you'll see candles that get turn yellow, they're either overbought or they're not overbought. They're overvalue, there's a big difference, or they're undervalue. So, for example, when this gapped up here, it was overvalued for these number of candles. Okay, now does that necessarily mean there's a short there? No, there has to be more to it. You have to check your volume, you have to check your higher time frames, right? You have to check what's going on. It's not just an outright short. Now you can see, for example, this has been overvalued since $14, but it's at 34. So I don't want you to think that just because something is overvalued, it can't get even more overvalued. It's just a heads up that you want to be considering levels when you see those situations, right? So here we were on Monday, which was the 29th, and you can see this stock just rocketed up from a low of $10 all the way up to $34, okay? And so when I was on the 1 minute chart and I saw that big gap up on Monday, I knew it was at least going to do some type of pullback on this day. I won't get into the specifics of the company. Let's just look at the order flow for now. Forget about the SEC filings. Forget about everything else. Let's just look at the order flow, what I was seeing, okay? So I knew we had into an overvalued situation. And quite honestly, the best trade of the day was a long here when it changed from overvalue back to a neutral condition where you could have bought it, okay? And that would have been a really good trade. Then it gets overvalued again, and then this is where I actually made some money on it during the day. I took a trade somewhere in here, I believe. Started seeing some pressing limits lower, and then it paid me really big, and I got out there. That was my one big winner on Monday. The other stock that I was following on Monday, I just want you to look at this accuracy. Remember, when it gets down here, it's saying, and it turns yellow, it's saying that that's undervalued. And you can see whenever you see these candles changing from under to over with my custom algo, it's really reliable, right? But you have to accompany it with volume, right? And in this particular case, contextually, that was not really enough relative volume for me to really be very aggressive on the first short. And in the context of the daily and the context of the fact that see the spider, which the IWM, which is the Russell behind it, the Russell was very high as well too. The Russell, by the way, if you don't know, is the small cap index. So I wouldn't have rushed into that first short, okay? But it did pay, and that was really nice. Now, the other stock that I was watching on Monday was WKHS, and kind of the same story. This stock was, I think, 2 or 3 break-evens, but yeah, same story. It's overvalued. It goes higher, goes higher. I don't know, I can't remember exactly where I was shorting it, but it ended up being a decent day on Monday and a really good start to my day, to my week. I can't remember exactly how much I made, but I did very, very well on Monday, okay? So let's go to the next day, if you will, and let's go to Tuesday, which is the 30th. And let's see what we were trading. Okay, so on Tuesday, here was my list. CARV, ATHE, BYFC are on my list for the day. And you can see right out of the gate, we get an overvalued signal here on CARV. Now, contextually, this day's a little bit different. Look at where the Russell opens, right? The underlying index opens basically at the close of the day. So, in a situation like this, a short right from the beginning when the underlying market isn't really strong is something that you can consider, assuming that you get some higher time frame confirmation, okay, which was this was the June 29th. There we go. So there's June 30th, right? And do I have some 15-minute resistance areas here? And the answer is hell yeah, I do. Look at the rejection off of 22. Look at the rejection off of 18, right? And then you get another big gap up here. So this would be something that, you could definitely, in this context, use these overvalued signal along, see the relative volume here? Along with this relative volume, in this context, it would be something that, you could definitely take a look at. And if we look at the daily chart, you can see that that's beautiful. I mean, like, it did spike from 2 to 22, but it's on the backside of the move right now, right? We are on the backside of this move. Right now, again, we're just going to look at the order flow. We're not going to talk about the SEC filings. We're not going to talk about too much else, just the order flow, okay? So what was the story with this? I think there was a story that Netflix was going to be putting some money into these banks. There was 2 banks that kind of did the same thing. So just from the order flow, you can see that, this is telling me I can trust an overvalued context in this situation, right? And so when we actually go down to the 1 minute chart here, that in hindsight was a good trade. Very, very good trade. Now, I probably would not have touched that trade. I can't remember if I traded it. I'm not going to go into the trade specifics. I'm just going to go through my thought processes on these trades. You can go and see. I made money every single day this week trading these penny stocks. Not going to go through specifically where and when I traded it. I just want to go through some general thought processes that can help you make better decisions when you're looking at these penny stocks, okay? So CARV was 1, and ATHE, let's take a look at that one. Okay, so here's ATHE. Now, I think some of these actually I wanted to buy them, right? So we're not looking for overvalued situations, and some of these we're looking for undervalued situations where you can get into some of these long. Some of these I wanted to buy. So I didn't take a trade here, but you can see here's an undervalued situation, right? On ATHE, I probably would not have liked that trade too much, but you probably could have made a little bit of money on that, right? And let's take a look at some other ones here. Okay, so here's BYFC. Now this is the one that I believe I traded, and I made an amazing amount of money on this one. I did very, very well on this trade. Again, contextually, we have the underlying index, which is, it's not strong, but we have this big gap higher. Contextually, I've got an overvalued situation. I go to my larger time frames here, and you can see that, the stock had this big spike up to 7 on that news, right? And then here's the day on the 15-minute. We take out some liquidity right off of this level. My students will understand why this level is a really important level right here. There was a big liquidity pool sitting right there. We take it out and then we reject it. And, so going down to that and looking at the daily, we can look at like a year here, and we can see same story. This is just a story that Netflix was going to put some money behind these. Big spike up. We're on the backside of the move. Okay, so these kind of trades, I freaking love them. Absolutely love them. The big spikes are over. The rejection has taken place. the people who float locked it at 134 are probably out of this by now, right? And now the stock is just going to slowly make its way back down to 124, right? So when you get into a move like this on the backside, absolutely amazing trade. And that's why I really put the pedal to the metal on this trade and really crushed it, right? And there you have it. Did very, very well on that trade. Don't remember my exact entry. You can go and check out in my room my exact entry. Probably somewhere in here-ish, right? Probably somewhere in here-ish. My students will understand I saw pressing limits lower here and did very, very well on trade. Now I probably could have made a lot more on the trade. I think I exited somewhere around 212 and 220-ish, I can't remember, but I probably exited too soon. I probably could have picked up another big winner on another. If I had held it, I probably could have picked up more money on that trade. Okay, so let's continue. Okay, now we're going to get into the following day, and we're going to look at an actual long. And this one I rushed it a little bit, and I'll talk about the trade. So NMTR sub $1 stock. Okay, we're talking about a stock that's opened up at like 80 cents. Now pre-market. Let me go to the pre-market here. Pre-market on that day, it spiked like really high, right? This is the 30th, July 1st. Yeah. So you can see here, this spiked from the day before on an FDA approval of one of their drugs, I believe. And, it went to 160. So the plan on this day, right, was to get long on this. So we're in this context, I'm looking for an undervalued situation. Now, whenever you have a sub $1 stock, usually when you have that type of press release come out, you're gonna hold that $1 level, right? You can see here back in September, it was down here at 97, got above $1, and it held that $1 level. Because if you don't hold that $1 level, you're going to get delisted, right? And you can see that this stock has this pattern of getting up to that $1 level long enough that they don't get delisted, and then they rinse and repeat this. Now, on that day, I thought for sure it was going to have enough strength to get back up to that $1 level. So that was my thinking on that day and why I wanted to get it. Because if they can't keep this above that $1 level every 6 months, I believe, then they're going to get delisted, right? So I thought for sure this was going to go back to the $1 level, and I was actually really confident in this trade that it could do that, especially since spiking there in the pre-market to 160, right? So we're looking for longs on this trade. Now, in hindsight, I probably should have waited till I got an undervalued condition here, right? And I wouldn't have taken very much heat at all, but I didn't. I actually was watching this in the pre-market at 80, and I got in at 79, right, in the pre-market. And, that's my fault, right? I usually do not like to trade pre-market unless I absolutely have something that I'm really confident in. And, I was really confident, like too much so, that we were going to get back up to $1. So when we got into this undervalued context here with some good volume in the pre-market, relative volume, I was all over that at 79. So, Wrong. Don't do that. Okay. Wait to the open, and wait to get some good order flow, and to get something that is more indicative of potential bounce. So in a bit too early, right? Now in hindsight, this level here probably was a better trade, right? 71.69, and if you go and check, I had a stop at 64 on this. If you go back into the room, so I would have been fine, and ultimately I would have been able to get out of that trade with a little bit of profit when we got overvalued here. See that? So we're undervalued here. We get overvalued at 78. I could have made about 8 cents on that trade. Not what I was expecting, right? But because I was expecting it to go back to $1 for sure. But I knew when I got into this early, I knew that I was screwed, because if this was going to go to $1, I would have seen much more volume coming into this stock, much more volume coming to stock. So by 10:30, I knew I was screwed, right? And if you go and check the trade, I actually got out of the trade at 77 or 76, something like that. I lost 2 cents on a trade. But, that's a situation where, things don't go the way you think they're going to do. I was pretty confident this was going to get back up above $1, right? No harm, no foul. Did not do too bad on it. And, made a small loser. I think on that day, let's take a look here. Yeah, on that day, it looks like I was just basically trading that. Now, how I actually made money on that day is the day before I had some WKHS puts, and they opened up for a huge profit for me. So I didn't actually make any money day trading on that day. I broke even on that day, and I made money on my WKHS puts. Okay, so there's a couple more shorts that I had on WKHS and Shill during the week. You guys can go on again, just read them all here. But WKHS, I really think this thing is overvalued like crazy. But you just got to be really careful with it. And I've just been really scalping it short, not really committing to too much, right? So I think Thursday I took another trade on it. Can't remember exactly, but I was playing I did trade WKHS short up here off of, I actually short WKHS here when it closed this gap. If you take a look at the underlying index at the time, you can see it was selling off on the day. WKHS did manage to close that gap. I took a short here, lost a little bit of money, got back into a short up here, and broke even on that trade. So that was not a really great trade context. You can see the overvalued conditions here, and that was okay. And then we'll get to Friday. So Friday, here was my list on Friday. Now on Friday, I actually made another mental error. I was rushed on Friday, and I didn't really do as much homework as I should. I didn't lose any money, but I actually should have been shorting VERA and FRAN, I believe, not FRAN, VERA, FRAN, and NXTD. These should have actually been shorts. Now, in the room I posted, I was watching them for longs. I didn't take any longs on them, but I didn't do my homework on it. And when I scale out to some larger time frames here, you can see there it is on Friday. So, the 15-minute, there's strong resistance here. There's strong resistance here, right? And you go to the daily, you can see that there was really strong resistance at 74, right? There's also resistance here up in this level up here. So, you got levels of high rejection, and I don't know why I missed that. I think I was looking at it like that, and I didn't just do that, All right, I think I just looked at it like that, and I thought, okay, this is another one of those situations that this stock could easily break out and go to $1 quite easily, right? You can see it's used to spiking before. So I was actually quoted this as in a long, but in hindsight, I probably should have been looking at it for shorts. I didn't take any longs on it, but I probably should have been looking at it for shorts. And if we go down to a 1 minute, you can see it instantly gets overvalued, right? Now, in a context like this, if I had have been paying attention, I probably would have tried to short it here, but it's a sub $1 stock. I can't even short it if I want to, okay, with my broker. So forget about that. Nothing really to see there. FRAN, same story, right? If I would have done a little bit of like homework on it, there's big rejection here, right? I mean, this can't hold these levels. I think this is a restaurant company, if I'm not mistaken, right? And so the entire industry is getting smashed. And you can see here, I mean, look at this big rejection here. This rejection here. This should have been on my short. Again, I think I was looking at it a bit. I don't know why I missed that as a short, because looking at it now, hindsight 2020, right? But this should have been a screaming short. It gets overvalued almost instantly. But look at the IWM. We got a big gap up in the market. So I wouldn't have rushed into that, right? What I probably would have done in a context like this is I would have let it come down, and I probably would have looked for an overvalued condition in the backdrop of that context. So probably a short here is what I would have taken. And in a context like this, I probably, you can see that the IWM is selling off behind it as well too. And I probably would have used something like a stop, something like this, right? Something like that. And I would have seen if I could have got, like 1-to-1, maybe a little bit better here. Yeah, I'm not even sure I would like that at all. All right, I'd be very honest with you. I don't think I could have put a stop in a safe enough place that I could have got a good R to R on my money. So I don't actually feel too bad looking at it now, because I think my safest stop is going to have to be above this level here. I think that's about as close as I can cut it, right? So you can see here, I can't even get like 2-to-1 on my money, right? Not very easily. I mean, it can, but by the end of the day, it comes pretty close, right? So not terrible, right? Not terrible. So that's a little bit harder of a trade. Now I don't feel, looking at that now as a review, I don't feel too bad about missing that. Just one other trade I want to talk about. It was GRAF. And I'm going to go through my thought process on this on Friday, because I really wanted to short this. And I was watching it carefully in the room. Now, this is where you think you're on the backside of a move, and it wakes up again, right? So the daily, we're spiking into craziness here, right? And this is, these companies, by the way, I think are the biggest frauds in the world. I mean, you're talking about these special acquisition companies. Now, this is an old Wall Street trick that was highly illegal. And in the 80s, many people went to jail for doing this type of shit. But, it's been rebranded now, and that's basically an empty shell company that claims they have a blank check so that they can acquire other companies using government funding, and it's just a complete effing joke. But anyways, that's a whole other story. I won't rant about that. But I think this stock is going back to $10 soon. But I was watching it on Friday, came up on my scanner, and I want to talk about it because there actually was a good trade on it. But let me go through my thought process because this was a bit tricky. So if you go and take a look in the room, I started watching it around this level here, I think, right? Go and check the timing on it. But in my thought process, when it got overvalued here, and I was looking at it, up at this level here, my thought process was, this is the second time on the daily chart that this thing has spiked like crazy. And in watching it intraday, the moves were really dramatic. Like it would show you a lot of resistance, and then just stop on a dime, right? So, when I was watching this move here, it would just stop on a dime. It would look like a big flush and stop on a dime dead, right? And then it would just run that liquidity, run those stops, punish those shorts. Same story here, right? It just would drop really hard, and you can't really see it now, but if you watch it in real time, you would see that the way that it was dropping was, it was like a vacuum. It was just like, when you're on a plane and you hit turbulence and the stock just drops. The plane just drops really quickly. Same thing was happening here, but it would just stop instantly, catch a bid, and take off and squeeze, right? So when it got overvalued here, my thought process was, I really want to short this, but I need something spectacular, right? I need something spectacular to happen. So what do I mean by spectacular? Well, I need an overvalued condition with heavy volume, but just not an overvalued condition with typical heavy volume. I want to see heavy rejection. And what this is called is climactic behavior. So, I was watching it. I didn't take any trade. You see, I would have been very tempted under normal circumstances to get into a short here and here, but I didn't. If you go and look in the room, you'll see I did not short that, right? Because I saw that those vacuums or those air pockets were happening, and the market maker was just using lower liquidity to run those stops. But then later on in the day, right there, the exact opposite happened. Okay? The exact opposite happened. Those air pockets happened to the top side. And we got that gigantic move up here. See the relative volume here? Big, giant relative volume just smashed into these shorts here, right? And then we're overvalued. And then I saw this big air pocket to the upside. So it did the exact opposite. It slammed all that liquidity up there. And look at the volume on that. It's not high at all in relativeness to this volume right here. That's why I like to use relative volume. I like to see relatively how was that volume compared to that volume. So when I saw that lower relative volume and that air pocket there, that was actually a good trade. Now, I didn't take it, but in hindsight, I should have taken it, and probably was a decent trade. Look at the IWM here. You can see the underlying index is selling off. It was a Thursday before the long weekend. That's the main reason why I didn't take the short. It was a little bit late in the day. There was only an hour left of trading, but I think I could have made some really decent money on that trade. And I probably would have I could have used a tight stop on this situation, just because I had all that rejection right there. And in this particular context, I probably would have done something like this. In hindsight, probably a short here with a stop right there, right? And it almost gave me 2-to-1 on my money, right? Almost gave me 2-to-1, right? So yeah, I think that was a good trade. Would have ended up making just a little bit of money on it, not a lot of money. Who knows? I probably would have scaled out something. But yeah, there you have it. So that's kind of my review for the week. And I'm going to be doing more penny stocks. I don't know why. I go through phases with penny stocks where I love them. And they're really great in high volatile markets. But when the market dries up and volatility dries up, so do penny stocks, right? You can see here, I pointed out probably like 8 plays this week alone that were good, really good plays. But usually when you have low volatility, penny stocks dry up and you might get 2 or 3 really decent plays a week. But right now they're firing on all cylinders. So I'm going to keep doing that. Okay. So if you like what you see here and you want to get, returns like this, like here's one of my students right here. This is a live student. This is not paid fake. This is real. Okay. This is one of my students here. You can see that, see if I can make this bigger here. So he's sharing me some long trades here. You can see here, this student, this was a month's worth of trading, I believe. 39 winners, 24 losers, 61% win rate. But here's where it's great. This guy made $6,000 in a month, risking $100 per trade. Let that sink in deep now. Okay? Risking $100 per trade, he made $6,000 in 1 month. Let that sink in. Okay, this is real. Okay, this is from a live chat with one of my most recent students. Okay, you want to get results like that. I am doing a Independence Day offer. It's going to expire tomorrow at 12 o'clock. 25% off all my packages for 1 week. Okay, so if you like that, head on over. And I really thank you all for your time. And bye for now.